This chart here shows the uptick in the PMIs that we've seen, both the China manufacturing PMI, the Caixin manufacturing PMI. Enda was talking there about the services story. Of course, there's a long-term reorientation that we're watching of this economy. Is this something to get excited about then in terms of where the global growth story goes, where Chinese growth goes, or is this just historic stimulus that has since been dialed back on?
Well, I'd be cautious about getting too excited, but perhaps a little more optimistic. Let's try and keep things in some degree of focus. So, yes, the improvement is encouraging. I think clearly it is a legacy of some of the stimulus measures that we've seen. So I think it does augur well for the outlook into 2017. And indeed, we're cautiously optimistic that global activity in 2017 will be moderately firmer than 2016. However, we're still talking about relatively slow growth. So we're still talking of not much more than 3% in the global perspective. But clearly, China is playing its part, and we are seeing that slow reorientation away from the reliance on manufacturing.
What are the implications here for some of the key risks for the Chinese economy? And I'm thinking here soaring house prices, the shadow banking sector, and elevated corporate debt as well.
Well, of course, there are always inherent risks in any market, but clearly if we're seeing slightly faster growth or better orientation of growth, that alleviates some of the pressure in those risks. But clearly the non-performing loans, the question marks over the banking system are there and will remain there. But if we can see a stronger foundation of growth, then that reduces some of the risk parameters. So it means we're less likely to see some of those sort of crystallization problems occurring, particularly in terms of the non-performing loans. So as long as we can see debt servicing remaining under control, and we don't see a dialing back particularly aggressively in terms of state financing, then I think we should be mindful of the risks but not necessarily overplaying them.
Jeremy, just very quickly, sometimes we talk about this, the outflows. We've got a chart here. I mean, the outflows, the capital outflows are the highest since January and stands out like a sore thumb in terms of the emerging market space. Capital outflows, what risk does that deliver to the yuan, in your opinion?
Well, clearly, I think that's one of the stories that is an ongoing discussion point. And indeed, when I was out talking to investors in Canada last week, that was a topic that came up regularly. And I think it is going to be a case that those outflows are going to continue over the medium run as investors look for opportunities elsewhere, and as we see a gradual loosening of the ties within the Chinese regime, that does allow a leakage of capital out of the system. That does suggest, at least in the short term, that the currency weakness is probably going to continue a little further. So the depreciation in both the currency against the dollar and on a trade-weighted basis probably still has a little further to run. And I think that will help to alleviate some of the economic stresses as well, because, of course, a relatively cheap currency will provide a degree of export stimulus. But clearly, we are talking about an outflow, but I don't think we're talking about a flood at this particular juncture.
Jeremy, let's stick on this subject of what happens to the yuan. You don't think that we're talking about a flood. This compares the yuan against the dollar with the yuan against a basket of currencies, and you reference both of them there. Clearly, the weakness in the yuan quite clear in 2016 against the US dollar. That's what we've got there in blue. And this is the basket. And looking a little bit flatter, actually, against a basket of currencies. Is that your view, or do you look at a different basket?
No, I think that's correct. And I think, in a sense, obviously, everybody tends to focus on dollar yuan, which clearly often is a reflection of both sides of the equation. So it's not just about the yuan, it's also about the US dollar, which generally has been appreciating as markets expect the probability of a rate hike before the end of the year. Now, we can come on and discuss that, no doubt. But clearly, I think we're reflecting something similar in the dollar's performance in Q3, Q4, in 16, as we saw in 15, as markets anticipate the probability of a Federal Reserve rate move. In trade-weighted terms, the impact on the currency is much less pronounced because, of course, we're seeing pressure in other currencies.
There's a lot of satisfaction that the performance has been slightly better than expected. What's going to be the catalyst for further upside in the Chinese economy? Or is it just holding on to the best you can get?
Yes, I think we have to be careful about assuming that we will see an acceleration. So I think it is going to be a case of maintaining the sort of momentum that we see now.